Hello, welcome back, everyone. This is Seewing Yi, and today I'm going to go over a REDFIN article headline dated for August, which is today. All right. So, without further ado, let me share my screen and let's get it started. All right. So, the headline is Housing Market Update. The typical US home buyer's monthly payment is up nearly 20% from a year ago as prices rise. But before we do that, I'm going to instead go over the mortgage news daily. Today's breaking news, which is the new 30-year fixed rate mortgage is 7.11%, a rise from the previous day at a rate of minus 0.09%. That's the 30 fixed rate for people who has excellent credit. But people that does not have excellent credit, they will be paying a lot higher than 7.11% on an owner occupied purchase rate based on Mortgage News Daily. And for those of you who's doing a VA loan, 6.75%. For those people who have good credit, higher than a FICO score 700. And for the first time homebuyers FHA mortgages, the 30-year fixed rate is 6.76%. And some other mortgage sites, they are showing currently even higher mortgage rate, probably around 7.3 to 7.4. So Mortgage News Daily is a little bit below the benchmark, but nevertheless, it is believed is the highest in the past 20 years, which is pretty shocking. In a way, it's not shocking. So today's rate is basically has been the highest since last November. Right? If you look at October, November of last year, see right here, mortgage rate around 7.21%. That's what's happening right now. And so expect to see elevated rates for the remainder of this year. And of course, that will put a lot of home buyers on the sidelines. Last year, exactly the same time, August 2022, according to Mortgage News Daily, the mortgage rate was 5.09%. And so today's is 7.11%. So year over year, the mortgage rate has increased by 2.02 percentage points. So that's still pretty significant increase in year over year. So again, that put a lot of people on the sidelines. So speaking of that, let me highlight the article today. The bigger takeaway for me based on this yellow highlight that I took the liberty of putting in here, home prices are increasing because of the mismatch between supply and demand. Economics 101 over it again. If demand is higher than the available supply, then home prices will increase. And that's what's telling. So high mortgage rates have pushed many would-be sellers out of the market. And once again, you have heard this for the past 4 months, year over year, homeowners are hanging on to their relatively low rates. They are locked in even more so than before, especially the recent mortgage rate has been increasing. That will further lock in those people that have historical low rates in the past. So as a result, the total number of homes for sale year over year is down 19%, the biggest drop in a year and a half, and new listings are down 21%. So let's look over the leading indicator of home buying activity. The Google search has been down 16%. The several people Google searches for home for sale, and that's pretty obvious. And let's look at some additional details. New listings has declined on all metros that REDFIN analyzed. They fell moves in Las Vegas at a whopping 43%. year over year in less new listings. Phoenix come right in a second at almost 40%, Providence 32%, Sacramento minus 31%, and Oakland minus 30%. Now, the new listing decline from this, so my takeaway from this short sentence right here, this pandemic boom time that have occurred, like Phoenix and Las Vegas and Boise, Idaho, in California, we see such a steep decline, quadruple decline in new listings, that this trend indicates to me, at least, that the level supply of inventory will be even worse than it is right now in those boomtown markets. Does it make sense? So if the boomtown markets right now, let's say two months supply of inventory, based on a trend of the declining new listings, and for the rest of this year, at least, if the mortgage rate continues to be elevated, then the supply of inventory of homes in those boomtown markets in the West will decrease to perhaps less than 2 months supply of inventory, which is absolutely prehistoric, not just historic, low, right? So with that said, let's go back to the article, right? Active listings, as mentioned, it's just these trends continue dropping, active listings dropping, new listings dropping, pending sales dropping, everything has been decreasing, again, due to the homeowners have such a historical mortgage rate, which is a gold mine, right? Which is anyway, months of supply. Let's go on. Months of supply, a measure of balance between supply and demand, was 2.9 months nationwide. And of course, the normal market is anywhere from 4 to 5 months of supply. It's considered a balanced market, and we are far from a balanced market. This is a very much a strong seller's market. Okay, so almost half of the homes that went under contract has accepted offer within the first 2 weeks. So we are seeing in many markets in the US, we're seeing some mini bidding wars. We are seeing multiple offers everywhere, especially in areas that I live in, San Francisco Bay Area. We have seen homes bid up 10 to 20% above asking, from 1 million to 1.2 million on a cookie cutter, 1,000 square foot home, 2-bedroom, 2 baths, for example, which is absolutely insane. All right, so let's go over the chart. Medium sales price is up. Go figure, right? 3.2% year over year. As you can see, the second half of last year, this chart right here, the red color line, show decreases in home prices nationwide around 10% on the second half of last year due to the skyrocketing of the interest rate. 2022 from the first half to the second half of last year, and some people, especially the crash bros out there, crash porn, who predicts the housing crash. That did not happen because at the beginning of this year, 2023, we have some steady median price increases as a result of the record low inventory and pent-up demand, even with the mortgage rate the way it has been year to date. So as you can see, at the beginning of 2023, there's a slight drop in medium sales prices in February, but since February until now, until July 30th, we have seen around double-digit 10% increases in medium sales price month over month this year. All the alleged decreases of home prices that occurred in the second half of last year has been more than made up throughout this year so far, as we heading into that middle of the year situation. But my prediction could be such that the medium sales price will be flat for the rest of this year. It's not going to go down the way it did in the second half of last year, right? Because of the remaining second half of this year, 2023, the house prices will remain flat based on the trends because of the seasonality. Because toward the end of each year, you have less people buying and selling homes. So all the strong uptick on an annual basis historically usually occur in the spring of each year. But the spring, this past year, was not the normal. It's really abnormal, if you will. So that's how it is. So the decreases in home prices has been more than made up by the increases of home prices nationwide. I know every market is local. There's no such thing as a national real estate market. But so we have seen some lack of our offset, right? So the correction that occurred late last year was more than made up by the rising home price increases. So either wash. So really, clearly, absent any catastrophic events out there in the economy, we are seeing some normalcy, balanced market, hopefully, if you will. But no crash for sure because of low inventory, historic low inventory, and still pent up demand. A lot of people, 1/3 or 1/4 of home buyers so far, they buy all cash, even here in California, even here in Bay Area where I live. And for those people that are not buying cash, they have a very high down payment, very good credit. People putting 30 to 50% down payment to buy their home. So where does money come from? I don't know. I guess real estate asset from a long-term perspective, from a historical perspective, is still very attractive asset class or asset real estate, right? That's always has been the case. All right. So let me conclude this. So median asking price is up 1.7% year over year. And housing payments. Okay. Let me emphasize a little bit over here. I really feel for the first time home buyers out there. I really feel people that, pre-pandemic, around 2020, as you can see, the average median price, average monthly mortgage in 2020, as you can see right here, the gray color, was around a little bit less than $1,500 per month. Now, you fast forward 3 years, July 20th, the average monthly payment because of the higher interest rate, is not 6.9 anymore. It's 7.1 to 7.4 right now, at least depending on your credit situation. But your mortgage payment in a mere 3 years from around $1,500 per month to $2,605 per month, almost 100% increase. What this tells me that the people, a lot of first-time home buyers are on the sidelines. They cannot afford to buy. For those that sat on the sidelines for the past 3 years for whatever reason, so based on the skyrocketing home prices that has occurred during the pandemic up until now, and based on the increase of mortgage rate from 3% 2.5 years ago to 7.1% today, your mortgage payment has almost doubled. So, put more people on the sidelines, especially for some home buyers. And a lot of people will be renting more so than ever before in history, in my estimation. So that's how it is. If mortgage rate stays elevated and home prices will increase because of low supply, and then more and more prospective buyers will be left in the dark, will be left on the sideline. It's very sad. The middle class is history. It's just people that didn't buy 3 years ago. I don't know whether you could able to qualify 3 years ago and you didn't buy. Then, of course, you may regret the decision because the market is not coming back for you. You're not going to see housing crash anytime soon. Based on the current economic trends, you're not going to see any more corrections. Things are going up and up based on what's going on. So that's how it is. Okay, let me conclude this. New listings of homes down 21% year over year. As you can see, everything's down. Record is a sort of it's a broken record. I should call this video a broken record. We are setting records. We're setting record of home price increases. We're setting record of new mortgage payment highs. We're setting record for lowest amount of inventory in history. Every single day, as I do this video, you can see record this, record that. It's a very strange market, but so people stay on the sidelines, continue to be renter. Hate to say this, you guys are falling behind. Continue to do, and very little. The market is going to come back to what you think it might in the past few years. The market will leave a lot of people behind, especially those people that are not taking action, they'll continue to stay in the sidelines for whatever reason. That's the way it is. All right, 2.9 months of supply inventory nationwide, although it has ticked up in the last few weeks to 2.9% dated July 30th, based on the current mortgage rate, around low sevens in the next few weeks, next few months, maybe. If the rate continue to be around plus or minus a few percentage point, high sixes and low sevens, we expect the supply of inventory to go back lower than 2.9%, 2.9 months of inventory is going to put, and the lock-in effect, and most resellers are not selling. We can continue to have an extremely low inventory level and still pent up demand still out there. So home prices will be at least stabilized or slightly increased for the rest of this year, in my estimation, depending on what local market, right? Each local market is very different. By the way, I would love your comments. Please comment below. Where are you watching this video from? What's happening in your local market? Are you seeing bidding wars? Are you seeing inventory lacking? I'm very curious to know, because although I live in California, myself and my investors, we have invested out of state throughout the past 20 years. And I know a lot of local markets, especially in the Midwest and South and Southeast. So if you live in those areas, please comment below what's going on with you. Comment on my below, and I'll be more than happy to answer some of your comments. I would love to get your feedback from my YouTube audience. Thank you so much for logging to my video. All right, so homes sold in the median is 27 days, although it's below the past few years, but still higher than the pre-pandemic. Homes are selling like a hotcake if it is priced correctly and it's a good turnkey property, clean property. So what else? Listing has dropped year over year. Price drops has decreased, and the average home sold for 100% of the final list price. The sellers are pricing, and the buyers they are meeting of the mind, or they agree. There's no anything outrageous out there. Let me see what else. That's pretty much it on this article. Let me share with you the national REDFIN weekly housing data. So first, let me go over the new listings nationwide. By the way, according to REDFIN, wait a minute. Let me click new listings. Okay, new listings, as you can see, dated July 30th, a few days ago. New listings are 83,000 or so, still 21%, 22% less new listings than 2022 right here. Okay, there's a tremendous shortage of new listings compared to the last 2 years, and especially compared to the pre-pandemic, which is like 50% less new listings this year than the previous pre-pandemic. Right, so that is the new listing scenario nationwide. And let me go over the pending sales. Not much different. Pending sales year over year, around 14% less pending sales compared to the previous year and previous 2 years, as a matter of fact. So, and then median sales price, as I already shared that with you, the decreases in home prices in the second half of 2022 has been more than made up by this year's elevated medium home price increases at a rate of approximately 10% increases of home appreciation, not home appreciation, medium sales price year to date, July 30th. That's good news, right? Active listings that are on the market at this particular period of time, once again, is almost 20% less active listings compared to last year and the previous year as well. So because of the slightly decreasing active listings moving forward, the low level of inventory will persist. And so that's what's happening. All these are the most important key indicators, in my opinion, is the month of supply. I already mentioned that at the beginning of the year, 2023, the months of supply were 18.4%. That was at the end of January, beginning of February. But since then, homeowners are not selling, most of them, unless they have to. So the supply inventory has been decreasing dramatically, vertically from February all the way until a few weeks ago. During the month of July, for whatever reason, the inventory has slightly increased up to a point where right now there are 11.6 weeks of supply, which is equal to 2.8 months supply inventory, which is pretty much historically low. But based on the mortgage rate that we're seeing in the low sevens, as you see, 7.11% with the mortgage linked daily, I suspect in the next few weeks or even longer, the month of supply inventory will be less than 2.8 months, probably 2.5, 2.4. So things are locking effect. It still can continue. It takes a lot to unlock the inventory because the sellers are sitting pretty on their 30 fixed rate mortgage on historical basis. They're not going to move. They're not going to sell their home with a 3% mortgage rate and buy a new house at a higher price at 7.2, 7.5%, which is essentially will more than double their payments. That's not happening. All right. So that's the bottom line. Anything else I need to show? Pretty much it. So the takeaway is this continual mortgage rate increases either 7.11% or even low or even higher. Even in my estimation, even 7.5% mortgage rate increase, if it happens in the next few days, next few weeks, is not going to change the market that much. The higher the mortgage rate going to increase, the less likely the home seller is going to put their homes in the market and give away their historically low mortgage interest rate. You the demand of homes will continue to decrease because less people can qualify for today's mortgage. More people will stay on the sidelines, especially for some home buyers. Demand will continue to decrease and the supply will continue to decrease. Buyers are not buying, sellers are not selling. So this is I call it just no market. There's no housing market. Okay. It's not a seller's market. It's not a buyer's market. The pendulum have not swung either way. Even the mortgage rate is high. Clearly, there's no market, no housing crash unless some catastrophic event is going to occur out there that we have not foreseen. But no housing crash. Really, the housing correction is pretty much over. In my estimation, I think the beginning of this year, the bottom already has occurred. The housing market, in my opinion, is behind us. So things are moving upward, trendward. So if you can afford to buy a primary home, please do so as early as possible. And I'm not a local realtor, so I have no incentive to say this. I'm merely a real estate investor. Okay. And I guide my investors to buy affordable markets, cash flow markets, turnkey markets in the South and Southeast and in the Midwest. That's what I do. That's what I've been doing for the past 20 years. Anyway, and again, if you see any kind of value whatsoever from this video, please hit the like button and subscribe to my YouTube channel. I do need more subscribers. And so also comment below. Like I said, I'm very curious where you're watching this video from. I'll be more than happy to answer your comments and give you my perspective of more than 20 years of real estate. I've helped thousands of mom and pop investors to buy out-of-state, remote turnkey cash flow properties in the best, fastest growing markets in the country, mainly South and Southeast and the Midwest. All right. So with that said, also subscribe to my website below. Just click my website below and put your email on there so you become a free member of our real estate investing community. So you can learn more about real estate investing. You get a lot of great free education. And one day, sooner than later, you could very well become a real estate investor and buy rental properties through the network that we have. All right. Thank you so much. This is Seewing. Thanks for watching. And I will see you in the next video very shortly. Have a nice day. Bye-bye.